Silver feels chaotic right now. One day it looks ready to break higher, and the next day it drops hard for no clear reason. And that feeling is exactly why most investors misunderstand it. What looks like chaos on the surface is often a sign that something deeper is building underneath. If you've ever wondered why silver never moves the way people expect, this video is for you. Before we go further, make sure you like this video and subscribe to the channel. It helps more people find this kind of calm, long-term market analysis, and it supports the work we do here at Hidden Value Report. Silver is not just another metal. It sits in a very unusual position in the global system. It behaves like money during financial stress, but it also behaves like an industrial commodity during economic growth. That dual role creates constant tension in its price. When investors focus only on inflation or only on industrial demand, they miss the full picture. Most people expect silver to move in a straight line. They believe that when inflation rises, silver should rise smoothly. When demand increases, silver should follow. But silver doesn't work that way. It moves in waves. It surges, it collapses, and then it goes quiet. That pattern is not accidental. It is structural. One reason silver feels so unstable is leverage. The paper silver market is many times larger than the physical market. Futures contracts, options, and derivatives dominate price discovery, even though the actual supply of physical silver is limited. This disconnect allows price to move sharply without reflecting real-world availability. In the short term, paper pressure wins. In the long term, physical reality always catches up. Another reason silver confuses people is timing. Silver rarely moves when people are emotionally ready for it to move. When confidence is high and optimism is everywhere, silver often underperforms. When fear hits suddenly and liquidity dries up, silver can drop with everything else. But after those moments, when attention fades and expectations are low, silver quietly begins to rebuild strength. This is where patience matters. Silver rewards those who understand cycles, not those chasing headlines. Every major silver move in history started from a place of disbelief. People were distracted by other assets. Stocks felt safer. Bonds felt stable. Silver looked boring or broken. And then conditions shifted. Right now, several long-term pressures are quietly building. Industrial demand for silver continues to grow, especially in energy, electronics, and infrastructure. At the same time, new mine supply is not expanding fast enough to keep up. Many large silver mines are aging, and new discoveries are becoming more expensive and more complex to develop. This creates a slow but persistent supply constraint. On the monetary side, global debt levels remain high. Governments rely on refinancing, not repayment. Assets that exist outside the credit system begin to matter more. Silver benefits from that shift, even if it doesn't show up immediately in price. What makes silver especially interesting is how emotionally it is treated. It is often ignored, then suddenly hyped, and aggressively sold. When sentiment is weak and confidence is low, risk is often lower than it appears. When excitement returns and predictions turn extreme, risk quietly increases. Hidden Value Report focuses on these moments of disconnect, not to predict exact prices, but to understand direction and pressure. Silver doesn't need a perfect environment to move higher. It only needs stress in the right places at the same time. A little inflation pressure, a little supply strain, and a little loss of confidence can go a long way. Another important factor is how silver behaves relative to gold. Silver usually lags gold at first. Gold moves quietly, then steadily. Silver stays behind, building tension. When that tension releases, silver often moves faster and more violently than gold. They are not sudden. They are delayed. This delay is what frustrates people. They hold silver, wait, doubt themselves, and then give up just before momentum shifts. This pattern repeats again and again across decades. The market doesn't reward impatience. It rewards understanding. Short-term price drops don't mean the story has changed. They usually mean leverage is being cleared. That's when stability slowly returns, even if price doesn't explode immediately. If you're watching silver right now and feeling uncertain, that feeling itself is a signal. Markets are calm at tops and uncomfortable near turning points. Confusion is not a flaw, it is information. At Hidden Value Report, we don't focus on daily price swings. We focus on structure. We focus on supply, demand, confidence, and cycles. Silver fits into all four. That's why it refuses to behave like a simple asset. As we move forward, volatility will remain part of the silver story. Sharp moves will continue. Headlines will exaggerate every drop and every bounce. The key is not reacting emotionally. The key is understanding where we are in the cycle. If this perspective is helping you think more clearly about silver, let us know in the comments. Share how you're viewing the market right now, or what questions you're still wrestling with. Your comments help shape future videos here on Hidden Value Report. And if you found this video useful, consider sharing it with someone who's been confused by silver's recent moves. A calmer perspective often spreads faster than fear. Silver doesn't move to make sense in the moment. It moves to rebalance pressure over time. Once you understand that, the chaos starts to look very different. Thanks for watching Hidden Value Report. Stay patient, stay curious, and we'll see you in the next one.